Thank you, Taxmann. Thanks for all the participants who have taken time to be present on this webinar session for this 1 hour. So there is going to be a hard stop for this at around 6 o'clock. Hence, to the extent possible, I'll be very briefly touching upon the subject for you, because that I would like to answer as many questions as possible from your end. And this is a very, in the refunds, that there are many kinds of refunds under the GST, but inverted duty refund has got its own special place in the GST. And often it has led to a lot of litigation. And of course, some clarity has emerged after the intervention of the courts, and the board has also learned the trade. And now that I think that for the trade, there is a lot of clarity which is available. But still, if there are any kind of a persisting questions for you, I'll be more than happy to address them. So for today's session, the agenda is going to be, what are the refunds under the GST? Where does inverted duty refund normally arises? What are the legal provisions? What is the procedure? What are the various forms used? And then the issues in claiming the inverted duty refund. Then I'll be taking up your questions live. So refunds under the GST are of the below kinds, that you can export the goods under LUT, or you can export the goods on payment of IGST under the claim of rebate, and then inverted duty refund, and then the other claims. The other claims primarily that you can see that in case if you have made any kind of an erroneous payment, or for the persons who have visited India and then leaving to their places abroad, that the government has initiated an option of refunding the taxes suffered in India, but that is yet to be made live. So under section under section 54(3) of CGST Act, the zero-rated supplies made without payment of a tax, and where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on the output supplies, other than nil-rated, are fully exempt supplies, except supplies of goods or services, or both, as may be notified by the government on the recommendations of the council. This is what the law says. So where does the inverted duty refund arises under the GST? So the term inverted tax structure refers to a situation where the rate of tax on the inputs purchased is more than the rate of tax applied on the outward supplies. So that means the inverted duty structure arises when the tax paid on inward supplies is higher than the tax payable on the outward supplies. This is a very important understanding we need to have. It simply says if the inward supplies are suffering at a higher rate and than the outward supply, then the refund is eligible. So a typical scenarios where that these kind of a scenario comes is a trader purchasing goods, LPG gas at the rate of 18% and selling it at 5% to the domestic customers. Supply of IT products by an IT company to the government institutions, wherein that they'll be buying it at 18%, but government supplies are at 5%. Similarly, composite supplies where the output is at a lower tax rate, and goods exported on payment of IGST under the claim of rebate, where the IGST rate is lower than the GST rate applicable on the goods or services which are going into the exported product, or accumulation of the ITC due to rate change. Product remaining the same, but there is suddenly a rate change to a lower rate, tax rate. In such a scenario, it is available even when the input-output tax rates are the same, but there is an accumulation because of any other reasons. So there can be a discounting, say 100 rupees you bought an item, but you are selling it at 10 rupees. So in such a scenario also, there can be inverted duty refund. And where supplies have been made to the merchant exporters under the notification 40 for 2017 or the 41 of 2017 IGST. So in all these cases, the tax rate on the output is at 0.01%. Hence, there is a scenario where inverted duty refund can arise. But not all these scenarios that you can claim a refund. So what are the legal provisions for claiming the inverted duty refund? If you refer to section 54, it says that it provides for a time period of 2 years from the relevant date, and the relevant date for the inverted duty refund has been defined as the date of payment of tax, as all other conditions of relevant date defined under this section are not much relevant. And the conditions that you need to keep it in mind. No refund of unutilized input tax credit shall be allowed in cases other than. So these cases only the refund is going to be allowed. So zero rated supplies made without payment of tax. That means to say that is under letter of undertaking, where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on the output supplies other than nil rated or fully exempt supplies. So there is a condition that other than nil rated or fully exempt supplies, except supplies of goods or services or both, as may be notified by the government on the recommendations of the council, provided further that no refund of unutilized input tax credit shall be allowed in cases where the goods exported out of India are subject to export duty. So wherever export duty is levied, then a refund is not going to be permitted. Provided also that no refund of input tax shall be allowed if the supplier of the goods or services or both avails drawback in respect of the central tax or claims refund of the integrated tax paid on such supplies. So wherever that you are paying IGST on your exports, then you cannot claim inverted duty refund. In case of construction services, as per this notification 15 of 2017, in case of certain notified goods, as per notification 5 of 2007, as amended by 44 of 2017, and a refund of unutilized ITC would not be eligible. So if the refund is not granted within 60 days of the receipt of the application of the refund, an interest of not exceeding 6% per annum needs to be paid as provided under section 56, subject to the conditions of rule 91. Provisional refund has to be granted within 7 days of the acknowledging the claim in form GST RFD 02. So what is the procedure for claiming this refund? So rule 89 specifies the document for filing the inverted duty refund, and which is going to be RFD 01A. It should be filed online in the GSTN portal, and it can be filed on monthly basis also. But in cases that who are filing the GSTR1 on a quarterly basis as per the notification 71 of 17, that they can file it on quarterly basis also. So the prescribed statements, statement 1 and statement 1A of form GSTR RFD 01A are to be filed. Drawback of all taxes under the GST should not have been availed while claiming the refund of the accumulated ITC under section 54(3)(2) of the CGST Act, and a declaration to this effect should form part of this RFD 01 as well. Under 89(5), refund of input tax credit shall be granted for the inverted duty cases as per the following formula. So maximum refund amount is going to be the turnover of the inverted rated supply of goods or services multiplied by the net ITC, adjusted total turnover, minus the tax payable on such inverted rated supply of goods and services multiplied with the net ITC divided by the ITC availed on inputs and input services. So for the purpose of this sub-rule, there are certain expressions which are key for us, like net ITC. It shall mean that the input tax credit availed on inputs during the relevant period other than the input tax credit availed for which refund is claimed under sub-rules 4A and 4B are both, and 9, adjusted total turnover in relevant period shall have the same meaning as they are assigned to them in sub-rule 4. So here, what you need to keep it in mind is that it is fraught with litigation when the word input has been used, because the strict interpretation by the department at that point of a time, input means only the input in relation to the input goods, but the input services they did not allow. So the matter went up to the Supreme Court, and after the intervention of the Supreme Court, which I am going to discuss in the later slides, that the input services also was permitted. That's how that now the revised definition has come into existence, and it has been substituted with effect from 1/7/2007 by notification 26 of 2018, that in case of the refund on account of inverted duty structure, refund of input credit shall be granted as per the following formula. So you can see that this is the formula that they have used. This services word has been included by this amendment. So what are the relevant legal provisions which you can refer it? I don't want to simply repeat what is there in the act and the rules, but I'm just touching upon which are the relevant sections and the rules, so that in your leisure that you can refer to them. That section 54(4) prescribes what are the documents required, and 54(5) is the order of the refund, and 54.7 is the order of the refund as per the section. 54.5 is within 60 days that from the date of receipt of the application that it has to be processed. 54.8b says refundable amount shall be paid to the applicant. 54.10 says withholding the refund in certain cases. So similarly, rule 89.1 is the refund application. 89.2, what are the other documents which are to be attached with the application, and 89.3, electronic credit ledger shall be debited by the applicant for the amount equal to the refund claim. 18.9.4 and refund calculation is given, and 92 is the acknowledgement in form RFD02, and 93 is the deficiencies, and 92.1 that the officer's order and other details. So you may come across these kinds of various forms. Just to give you a snapshot that what are the terms that you should be familiar with, I'm just giving you this slide also, that form RFD01 is the application for refund, 2 is the acknowledgement, 3 is the deficiency memo, 4 is the provisional sanction, 5 is the payment order, 6 is the final order, 7 is the refund withholding order, 8 is a show cause notice, 9 is a reply to the notice, and 1W will be withdrawal, and PMT3 will be order recrediting the refund to the electronic credit ledger. So these are the various forms that you should be aware of while trying to file this inverted duty refund. So what are the things that I have covered in the previous slides is what are the legal provisions, sections and rules that you should be aware of. And in this slide that I am giving you a flavor of what are the various forms that are going to be used in this process. So coming to the issues and how the litigation has evolved over a period and how the clarity has emerged. So this circular 135 has created a confusion in respect of the inverted duty refunds where inputs and the output supplies are the same. That means to say that the same a trader who is buying the goods at a higher rate is selling the goods at a lower rate. He is buying it at 100 rupees, but he is selling it at 10 rupees, tax rate remaining the same. So in this has created a litigation because the para 3 of this circular reads as under. It has been brought to the notice of the board that some of the applicants are seeking refund of unutilized ITC on account of inverted duty structure where the inversion is due to change in the GST rate of the same goods. So here, this can be explained through an illustration. An applicant trading in goods has purchased the goods X attracting 18%. However, subsequently the rate of GST on X has been reduced to 12%. It is being claimed that accumulation of ITC in such a case is also to be covered as an accumulation on account of inverted duty structure, and such applicants have sought refund of the accumulated ITC under section 54.3.2. So here in this case, the case is not that 100 rupees is the purchase price and 10 rupees is the sale price, but it is the same value can be there, or you can add profit also. But nevertheless, what is happening is that the tax rate that is applicable on the input side is high, but on the output side, the same product, the tax rate is low. So there also, there can be an accumulation. And certain SSCs have filed a refund, understanding it that since there is an accumulation and there is a difference between the input tax rate and the output tax rate, that why we should not be eligible for it. So in that relation, while giving clarification, the board is clarifying that it may be noted that refund of accumulated ITC in terms of clause 2 of subsection 3 of section 54 of the CGST Act is available, where credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supply. It is noteworthy that input output being the same in such case, though attracting different tax rates at different points in time, do not get covered. They have clarified it doesn't get covered under this section. So they've clarified that refund of accumulated ITC would not be applicable in cases where the input output supplies are the same. But unfortunately, what the board has missed is that this particular circular has been issued under the powers conferred on them under section 168. This section provides for powers to issue orders, instructions, etc. for the purpose of ensuring uniformity in implementation of the Act. So under the guise of section 168, which is essentially for ensuring efficient implementation of the Act, circular cannot impose conditions which are not provided in the Act itself. Because if you read bare Act of 54(3), it simply says when there is an accumulation because of the tax suffered at the input and output stages, you can go for a refund. So a plain reading gives a plain understanding that for the same goods, when the input tax is high and output tax is low, one can seek a refund. So exactly the courts have interpreted it in a right way, the way the trade has understood. So the Honorable High Court of Guwahati in the case of BMG Informatics Private Limited, and subsequently the Calcutta High Court in the case of Shivako Associates have taken the same view in favor of the SSCs, and the court observed that the legislature was mindful of the fact that there may be instances where input-output supplies are the same and consciously did not create any dichotomy for allowing the refund in such cases. So such an interpretation, which makes the main provision of the Act redundant and OTOs should be discarded. So there is another case from the Rajasthan High Court in the matter of Baker Hughes Asia Pacific Limited, wherein that they have also held that refund should be available considering the clear language of the provisions. So after these High Court decisions, the CBIC has amended the circular by issuing another circular number 173 on 6th July 2022 and revised this para 3.2, wherein that they have clarified that it may be noted that the refund of accumulated ITC in terms of clause 2 of first proviso to subsection 3 of section 54 of the CGST Act is available, where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on the output supplies. It is noteworthy that input-output being the same in such case, though attracting different tax rate at different point of time, do not get covered under the provisions of clause 2 of the first proviso to subsection 3 of section 54 of the CGST Act. There may, however, be cases where though inputs and outputs of goods are the same, but the output supplies are made under a concessional notification due to which rate of tax on the output supplies is less than the rate of tax on the inputs. In such a case, as the rate of tax on output supply is less than the rate of tax on the inputs at the same point of time, due to supply of goods by the supplier under such concessional notification, credit accumulated on account of the same is admissible for refund. So they have clarified now that the inverted duty refund is eligible in all such cases also. And they have also reiterated the caveats that other than the cases where output supply is either nil rated or fully exempt, which is already there in the law, and also provided that supply of such goods or services are not notified by the government for their exclusion from refund of accumulated ITC under the said clause. So the inverted duty refund would be available in all cases where input and output may be the same, but the taxes applicable thereon are different due to the change in the tax rate or issuance of concessional rate of tax in certain cases, and the output is not nil rated or fully exempted supply, nor under the exclusion of the claiming refund. So this is the important learning from the litigations which were held by the 3 different courts on the same lines. Similarly, there is one more issue which has come up. So the notification 26 of 2018 made changes to Rule 89.5 with retrospective effect from 1st of July 2017 and allowed refund only for the input goods. Input does not include input services and capital goods for this purpose. So as per the circular 17.9 of 2018, net ITC includes ITC and all inputs, whether or not used directly consumed in the manufacturing process. An input tax credit of the GST paid on inputs shall be available to a registered person as long as he uses or intends to use such inputs for the purpose of his business, and there is no specific restriction on availment of such ITC under section 17.5 of the CGST Act. And thus, ITC on stores and spares, packing materials, materials purchased for machinery repairs, printing and stationery items, and are thus included in the net ITC for calculation of the refund. And this has been litigated in various forums. So, Chennai High Court, Madras High Court, in the matter of TVL Transnational Strike, Afghans JV, and Gujarat High Court in the matter of VKC Footsteps have taken divergent decisions in this. So, both the matters have approached the Supreme Court, And the Supreme Court finally, in the matter of VKC footsteps, has given a ruling that the extent of restricting the input credit to the input goods and not extending the same to cover the capital goods and directed the government to review the formula which restricts the input services. So the formula is restricting the credit of only the input goods. Input services are not included. Capital goods were anyway kept out of the definition of inputs itself under the GST law. So when the Supreme Court has directed the government to review the position, CBIC has come out with a revised formula and issued a notification 14 of 2022 on 5th July 2022. And inverted duty refund is not permitted only in the case of capital goods, but it has been allowed on the inputs and input services also. So there is a big relief for the trade now in terms of the inverted duty refund calculation. So the formula also got amended, and it has been amended with retrospective effect. Of course, it was also, this clarification is also fraught with some kind of litigation because the government has restricted that the previous settled cases should not be open and things like that. So still there are some litigations which are going around. So now I have completed my presentation, my brief on the inverted duty refunds. So I would like to hear from you people that if you got any questions like that, I would like to answer them. So the QA, I am not seeing any questions so far. So I request all the participants to raise their questions either directly or that they can put it in the chat box or the Q&A box. See, Asim Sinha is coming out with a query saying that a zero-rated supply is also allowed. So, if it is a zero-rated supply, it is allowed. But it is in the tariff itself, if it is a nil-rated, then it is not allowed. So, there is a difference between this zero-rated and nil-rated. So, you need to understand. So, if it is a nil-rated, as per the tariff itself, then it is not going to be allowed because zero is also considered as a tax rate only, but a nil is not considered as a tax rate. And this has been clarified from the central excise era itself. So there is another query which is coming from Kavalji, that whether casual taxpayer can apply for refund. So how the casual taxpayer can go for a refund? I need a situation because I doubt that the casual taxable person will have the time to go in for refund also, in addition to, because that the time given to him is very less under the law. So if he can come out with a practical example, maybe that I will be able to answer him better. And then there is one more query wherein it says that the tax rates are the same. Can the refund be allowed? Yes, that is what I am telling. That when you are purchasing at 100 and selling it at 10 rupees, but the tax rate remaining 5 in both the places, there is an accumulation. So plain reading of the language of the act is not barring you to go in for a inverted duty refund. But the only thing is that at the time of selling, why you are adopting a lower rate and whether it is acceptable, because that the GST valuation, mind you sir, now it has been aligned with the customs valuation rules. So when you need to have a proper justification that when you bought these goods at 100, how you are offering it at a discount. So if you have got a justified reason for it, and if it is acceptable valuation, then certainly inverted duty refund is going to be permitted for you. Do we still need to adhere to the matching concept for availing this inverted duty refund for previous years 17 to 19? Sir, inverted duty refund has got nothing to do with the matching concept. Matching concept is only for you to avail the ITC. So ITC rules as they are, that you need to follow them. You cannot say that for claiming the refund that I will not follow the ITC rules, because first that you should have a credit and there should be an accumulation. Then only you can think of the any refunds or the tax payments. So certainly ITC rules matching concept has got nothing to do with inverted duty refund, that you need to have the ITC in hand. So for that, matching is inevitable. We are exporting under LUT. Are we eligible to get ITC of expenses? Certainly you are eligible for ITC on your expenses, subject to the section 17(5) restrictions. Because you did not mention on what kind of an input that you are facing any kind of a challenge. If you are very particular on one particular service, maybe that we can discuss service or goods that I can discuss. But in general, if you are asking whether you are eligible for the ITC on your expenses in relation to your export, yes, as per the law, you are permitted. CTP has paid rent at 18 and sale is of 5%. I am unable to understand, Kavalji, that what is this CTP and rent payment of at 18 and then the sale is at 5%. If you can explain, maybe that I will be able to answer you better. If some products are sold, with the purchase at 18 and sale 18, but some products are sold at 5, ITC 18, then refund can get for specific product sales at below rate and purchase for products at 18. Slightly the way the question has been framed is giving me the confusion, but I'm trying to understand that if you are buying at 18 and selling at 18, then inverted duty refund, that it is very difficult for you to claim, because unless the value has decreased. So a product at 100 rupees with a tax rate of 18 when you bought it, for justifiable reasons, you are permitted to clear the goods at 10 rupees value, but 18 rupees tax, then there is an accumulation in your hand. In all such cases, inverted duty refund is going to be allowed. But there can be cases where that you bought a goods at some X value, but the tax rate is 18%. But at the time when you wanted to sell, because of some notification changes in the GST council or on the public demand, the tax rate has changed to 5%. So if there is an accumulation, in such a case also, the inverted duty refund is permissible. Mind you, sir, inverted duty refund is only for domestic transactions. That is a very important thing one needs to understand. Inverted duty refund is applicable only for your domestic sales. Time and again that this has to be kept in mind. Then can refund be applied? I'm unable to understand. Let's out of my total input, only 5% input is at a higher rate as compared to outward liability. See, it has got nothing to do with the percentages and all that. What is that they want is, there are certain inputs which have gone into the output. So out of some 10 inputs which have produced one single finished goods, so some of them are at 5, some of them are at 18, some of them may be at 28 also. So the percentage at 18 and 28 can be 5%. 95% of your inputs may be at a 5% tax rate only. And on the output, you are going to sell it at 5% tax rate. Then also, you can go for an inverted duty refund in such a scenario, because one of your inputs is certainly at a higher rate. And if you have an accumulation, which is important, because for you to go for an inverted duty refund, what you need to have in your electronic credit ledger after offering it to the sale in the domestic market and after meeting your tax obligation, if you are still left with any kind of an input credit which is accumulating because of this inverted duty structure, then certainly you can go for a refund. So no percentage needs to be discussed at that. So even if one input is at a higher rate than the output tax rate, then you are good to go, provided that you have an accumulation and you can seek a refund. Trader purchases at 12% and 18%, but sale to hospitals and institutions at 5% as per notification. Can trader claim refund? There is no bar as a trader or a manufacturer, sir. GST does not distinguish between the traders and the manufacturers, unlike in the past regime where manufacturers are to be registered under the central excise, traders are to be registered under the VAT laws, all that. Now you are in SSE under the GST and your purchases are at a higher tax rate than the sales. Hence, certainly if there is an accumulation after meeting your domestic tax obligation, certainly you can go for a refund, whether you be a trader or a manufacturer. The product is purchased at 18, but after it has changed between the financial year to 12. So while getting a refund, at what rate I'll get the return? See, it is not that at what rate that you will get. At 18, when you have purchased the goods, say for example, 100 rupees of your purchase value is taxed at 18. So the ITC that you have is 18 rupees in your hand. But when you are selling at 12%, so at 150, because that you are adding a profit margin. So you have to pay 18 rupees. So when ITC 18 rupees credit is there for a purchase at 100, when you are, after including your profit margin, when you are selling it at 150 at 12% tax rate, no, all that 18 rupees gets used to pay your domestic tax liability. So you are not left with any ITC in your hand to go for a inverted duty refund. But in the same case, if you are selling this product at 125 rupees, then what happens? On the input side at 100, when you have purchased at 18%, 18 rupees credit is there. But on the output side, 125 rupees at 18, when you are selling it, then you will be still left with 4.5 rupees of credit in your hand, which certainly you can go for a refund. 9 rupees will be left that you can certainly go for a refund. So in all such cases, that refund is eligible. So what you need to understand here is, after meeting your domestic sales obligation output tax liability out of your ITC, if still that you have an accumulation of the input credit in your hands because of the inverted duty structure, certainly you can go for a refund. Input accumulated in service is also can be claimed now, except capital asset is not eligible. Yes, your understanding is right. Capital asset, it is not eligible. Input goods, input services, yes, you can go for it. What are the consequences when the purchaser takes input credit, but the seller fails to make payment of the tax, and that input credit will become ineligible for the buyers, and the buyer will make a complete payment to the seller. So it is more to do with the ITC under the GST. Yes, the law is framed in such a way that when even if the seller makes the payment to the purchaser, including the tax also, but if the purchaser is not remitting the tax and not filing the return, then the seller has to face the music. That is what is the GST design, which we can't question. Difference between zero and nil rate. I told you, if the zero rated supply means like exports is zero rated, they are not nil rated. But certain goods are exempt from payment of a tax. So when a person dealing with taxable goods and exempted goods, exempted means it is a nil. So in all such cases, prorated input tax credit reversals and all will happen. So the difference between zero rate and nil rate, easily for you to understand, is exports are zero rated. Zero is also a tax rate. But when exemption is given, they are nil rated. First, I was able to explain. Sale is at 5%. That is what I told, that when the purchase is at 18 and sale is at 5%, and after meeting your obligation, which I have explained, in 100 rupees, 18% input credit, 18 rupees, but 100 rupees worth item, I sold at 150 at 12 rupees tax credit. Then also you will not be left with any input in your hand. But if you are left with input, certainly you can go for it. Casual taxpayer has paid rent at 18% and the business is of garments at 5%. So can casual taxpayer apply for refund? See, when you are taking premises on rent and you have some accumulation, but when you are into garments business and when you are offering your products at 5% rate, are you still left with any kind of an input credit accumulation? If your business is such that the input credit accumulation is happening and it is due to the services because of the VKC footsteps, recent Supreme Court decision, and thereafter the CBIC's amendment, when you are putting up that formula, so inputs and input services both can be used in it. Hence, you will be entitled provided that you have any accumulated credit. In addition, seller deregisters is the number due to lack of sales. So we can't help it. This is ITC, that it is a separate discussion altogether. But nevertheless, I'll address your question. The thing is that when you do not have the matching in place, then ITC is bad in your hands. We are selling our products through Amazon and paying higher rates at 18% on services like advertisement, commission, transportation, whereas our output rate on sales is at 5% only. Department is refusing the refund. Now, what can be the reason for the department to refuse? Have you received any kind of a show cause notice saying that in such a scenario, a refund is not going to be permissible and all? So if you can be more specific in your query, maybe that I will be able to help you to answer it. This is from admin to hosts and panelists. So, but we are selling products through Amazon at 18% services, but the sale is at 5%. So certainly it is a case for going in for a refund, but why at all that the department is refusing? If there is anything given in writing, if you can share it with us, if it is not private, then certainly that I will be able to address you. Can you please explain the latest formula for claiming the refund? The latest formula for claiming the refund remains the same, except for the change of the input credit definition, wherein it is not confining itself only to the goods, but it includes the input services also. So you can refer to the 54.3 and then the 89.5, wherein that the formula is given. Maybe you can refer even to my slides also. Once after this presentation, the Taxmann team is going to share it with you there, that you can refer to it. Sir, are tour and traveling expenses ITC allowed to get refund? See, tour and traveling expenses, if they are eligible subject to the section 17.5, and if there is an accumulation because of the tax rates being different on the inputs and outputs, I don't see any reason that why the refund is not going to be allowed. See, don't just go by that whether I get a refund. What you need to understand also is that whether you are having the electronic credit ledger, is there any kind of an accumulation after meeting your output tax liability is a very, very important point one needs to observe. Then only you can go for a refund. To go outside from town to conference related tour and traveling expenses, that you can go, but I presume that you are some service provider. So where exactly that you are going to get this kind of a inverted tax refund, that I am unable to understand. So if you can be very specific in your query, maybe that I will be able to answer it. Export sales zero rated under LUT for software services made. Can we take the accumulated ITC as inverted duty refund? Sir, I have explained to you and I have reiterated earlier that inverted duty refund is only in relation to the domestic sales. It is not applicable for exports, because if you see the conditions, it says when IGST pay, if the exports are done on payment of IGST, then inverted duty refund is not applicable. And the second scenario is when exports are under LUT, that you cannot say that there is a zero rate. There is a tax rate for it, but you are giving a letter of undertaking and assuring the government that you are going to get the foreign exchange consideration for it, because services will be deemed as an export only and only when you are going to receive the foreign exchange. So there is a tax rate applicable, but the tax rate has been exempted for you for the time being, because based on your letter of undertaking which has been given by you, that you are going to get the foreign exchange for the services rendered by you to your overseas customer. So in such a scenario, the inverted duty refund is not applicable. Inverted duty refund is applicable only and only for domestic sales. It is not applicable for your exports either under LUT or on payment of IGST. Buy sale includes sale of goods at 5% and 18% mixed, whereas purchase all at 18%. So partial sale at 5% is due to the notification. How to work the formula? Formula working is the same, sir. What we need to see, some goods we are buying at 5%. I do not know exactly what is that quantity. and some goods, some X quantity, that X value you are buying at 5, Y value you are buying at 18. But when you are selling all this, that you are making sales at both 18 and 5, means that if you are a trader and selling the same goods and with a profit included, then certainly you will not be left with any kind of an ITC in your hands. If there is an accumulated ITC still lying in your hands, then yes, that you can go for a refund in such a scenario. But when it is a mixed kind of a supply and all, I have my own doubts whether you have done your math or not, Mitesh. So you just please see that if there is any kind of an accumulation after meeting your output tax liability on your sales, if you still have, then there is a case for you. So I think that I have completed what all there in the chat box. Now I am going to take up the questions in the Q&A section. Sir, how reverse charge ITC of service can be claimed in inverted duty refund? So there is no different treatment as far as the ITC claim is concerned for inverted duty refund. See, first of all, you have to have your input tax credit. So when you have paid something under RCM, so you must have received an invoice from your overseas supplier, service provider, and then you have generated your self-invoice. Because for RCM payment, you need to generate a self-invoice. So, and you might have discharged the tax in cash. So because RCM has to be paid always in cash. So once you have done all these things, based on your self-generated invoice only, that you will be taking the input credit. So once the input credit has come into your electronic credit ledger, then you got to see whether your inputs are at a higher rate and your output is at a lower rate. And after meeting your output tax obligation, that still the credit accumulation is there. If it is there, then apply the formula which is given in the rule book, and whatever they refund that is eligible, certainly you can claim. Hope I have answered your question. So, yeah, then can we claim refund of input expenses which is not closely related to the production? See, when your input expense itself is not related to the production, I have my own doubt whether it is going to be eligible in your hands. So, remotely connected, all those things, that if it is a case where your ITC is good in your hands, then certainly the refund and other things, it is going to be applicable. For paying your output tax liability or to going for a refund, then you can think of. But when your ITC itself is bad, then nobody can help you. So there are two things. First, you decide whether your ITC in your hands is good or not as per the law. Once you decide and confirm that your ITC is good in your hand, then you first meet your output tax liability. Then you examine whether it is a case for inverted duty refund, and as per the formula, what is that amount that you are entitled to. Once the formula gives you a positive number, certainly you can go for it. Hope I have answered. Then, in case we have a local purchase in IGST and CGST, SGST, and against that we have partly export under LUT and partly local sale as brokerage, then while claiming refund, under which option can we file RFD 01, and will it be proportionately or fully? Sir, I am repeating the things that I have explained to you earlier. First of all, what you need to keep it in mind is the inverted duty refund, what we are talking today, is only in relation to the domestic sales. It is not applicable for your exports. So once the exports are out, see the domestic turnover, and then if it is a fit case for you, certainly you can go for it, irrespective of whether your purchases are in IGST or CGST and SGST. That doesn't matter. Hope I have answered you. Then there is another query. Is input credit reversal, ITC reversed due to 180 days or more, should be considered in calculation of net ITC? Again, I am repeating what I told you earlier, sir. First, you should have a good ITC in your hand. When your ITC itself is bad, then there is no way that you can use that for either to meet your output tax obligation or for a refund. So when you say that there is a ITC which is crossed the 180 days payment obligation, hence it is bad, which you are going to reverse, then definitely such an ITC is not fit to be considered in your calculation. Can we avail refund on GST and capital goods purchase, where capital goods used for furtherance of business and end product or services are exempt? See, when you are fully into output activity, whether it be goods or on services, but your entire output activity is not having any kind of a tax and it is exempt, there is no question by which that you can avail the credit on the capital goods. So it is ruled out. You cannot do that. Only when you have a taxable obligation on your output activity, then input credit is going to be allowed to you. Coal cess ITC, covered or not under inverted duty structure refund. See, these are two different questions. That is what I am telling you time and again. Coal cess ITC. So there is nothing called whether a cess ITC is covered or not covered. The thing is that your ITC, if it is there in the electronic credit ledger, and if you feel that it is a eligible ITC for you and not initiated by any of the exemptions given under section 17(5), and if your ITC is good, it is good for meeting your obligation on your sales and also for going in for a refund. Hope I have answered you. We are exporting goods with payment of IGST, but we have inverted duty structure. So can we claim refund under this rule for remaining ITC, which is accumulated due to inverted duty structure? This is what I have explained you earlier, sir. Inverted duty refund is only in case of domestic sales. It is not meant for export. I'll tell you, there are some products so on which the inputs are purchased at 12 and 18, whereas the output is having a tax rate of 5%. But when you are making domestic sales, certainly it is resulting into inverted duty refund and you can go for it. But when you are exporting it on payment of 5% of IGST on your exports, by definition itself, it is exempted from inverted duty refund. If you read the section and the provisions of the law, then it is very clear what it says, that when export duty is there on your exported product, or when you are paying IGST on your exported goods, then inverted duty refund is not eligible. So you cannot go for an inverted duty refund for these cases. Hope I have answered you. Can services which are capitalized in books refund under this option is eligible? Again, my answer remains the same. ITC is different, refund is different. First of all, you decide whether the ITC in your hands is good or bad. So if you are capitalizing services for whatever may be the reason for you, then if the ITC is good and it is reflected in the electronic credit ledger, then is it a case for you to go in for an inverted duty refund? You got to examine by looking at your inputs and the tax rates applicable thereon and the outputs, and accordingly you have to take a call. So what are the consequences when the purchaser takes input credit but the seller fails to make a payment? I think that I have answered this earlier, sir. So there are some more queries which I am going through. Input of advertisement expenses is allowed or not? Sir, if the advertising expenditure is in or in relation to your business, then it is going to be eligible in your hand. So you got to examine whether whatever the expense that you are incurring, that advertisement is for your furtherance of your business. If you are able to justify that, yes, certainly ITC thereon is allowed. In addition, seller deregisters the number due to lack of sales, which I have answered, I think. And then, sir, is input credit reversal, ITC reversal due to 180 more should be considered for calculation, which I have already answered to you. And then, thank you. I have given my mail ID in my presentation. The first slide carries my mail ID. So anybody can reach out to me. If notification provides that there is no refund of accumulated ITC is available on account of inverted duty structure, is the notification valid? Perfectly valid, sir. Such a notification is there already for textile products, wherein that they say on the existing stocks that you cannot go for a refund and it cannot be challenged, because when the government is giving you any kind of a benefit, they are also having powers to specify the conditions under which such a benefit can be extended to you. So this has been upheld by the Supreme Court also. Hence, such a kind of a restrictions that they can place. If traded products which are procured and sold at the same rate of tax, do we need to include this turnover? Sir, when you are trading the goods, you will be buying it at 100 and selling it at 150 with your profit. So if the tax rate remaining the same, where is the question of you coming into the inverted tax refund and then in the workings? The question itself is answered in your question itself. So please see that. If ITC under inverted duty structure in credit ledger, and suppose if we use the credit in sale or service charges, then allowed. If no refund under inverted duty structure claimed. Sir, question is not very clear. ITC and question is not clear, sir. Hence, I am unable to answer it. Rajesh, you can reframe it. Capital input can block our actual refund as service blocked our refund previously. Any change for capital input expected in future? Sir, capital goods are not going to be allowed under this scheme. So kindly don't ever venture into, because government, when it is extending the benefits, they can as well prescribe conditions. And one of the conditions that they have prescribed is that capital goods is not covered under the input definition. What is covered under the input definition is a restricted understanding earlier, prior to the VKC footsteps of Supreme Court decision, that they have included only the input goods, but now that they were liberal enough to include the input services. But capital goods is a hazardous guess under the GST, because by definition of the inputs under the GST law, capital goods are excluded. Export exempted goods, ITC on input packing, etc., used to export the goods. Can we apply for refund under the export category? Yes, but not under the inverted duty refund, sir. Under the exports, you can explore your option. When we purchase from the regular taxpayer and sales to some SEZ party with payment of tax, can we claim refund? Sir, clearances to SEZ are deemed exports. If any person pays all the outward tax liability through cash, and after that there is no sale, but ITC in respect of the same is claimed after discharging the outward tax liability, so there is an accumulation of ITC as there is no business. So can I claim refund under such a situation? Under which head? You don't have any head to claim, sir, because for you to claim refund, normally the refund is allowed only when you are into exports. There is a very special circumstances that when you are into domestic sales and your inputs are at higher tax rate and output is at a lower tax rate, the government is kind enough to allow you the inverted duty refund. So if such is the case, then you are in a very peculiar situation wherein that you are generous enough to meet your output tax liability in cash, and you have accumulated the ITC which you have availed later, and you don't have any business. Now that you want a refund, not permitted. You have to wait for your business to pick up and then claim it, but not under refund to meet your output tax liability. So how RCM ITC will be shown in Annexure B and Statement 01, as statement will be cross-checked from the portal at the time of uploading JSN file. I think it is a too technical procedural matter, sir. I am not addressing it because it is not relevant directly to the discussion that we are having. Kindly take webinar on export and import under GST and their practical implications. So this is something to the taxman. If they permit, I will be glad to do that. We are exporting goods with payment of IGST, but we have inverted duty structure. So can we claim a refund under this rule for remaining ITC which is accumulated? I think, Jignesh, that I have answered you earlier that inverted duty refund is only and only in case of domestic sales. It is not meant for exports. Input services included in the new formula. Can we claim for the past period as well as for which we are making refund application? No. Sir, refund application has to be filed within 2 years from the date of payment of tax. So I am having a doubt whether your claim is going to be within the time period. Please check. But yes, if you are going to file it afresh, then certainly you can include the services. For which year refund application can be done now after relaxation of dates, which I have answered you already, sir. 2 years is the time period given, and subject to the Supreme Court extending the time periods for several things due to the corona. Is there any latest circular issued in respect of refund under inverted rate structure? So what is that clarification that you are seeking, that you wanted to see the circular? I am not aware, but all the circulars relating to inverted duty refund are mentioned in my presentation. You can see that once you receive the copy, sir. And whether notification stating that accumulated ITC on account of inverted duty structure will lapse from a future or a present date is valid. Accumulated ITC on account of inverted duty structure will lapse. Sir, the question itself is absurd, because once you have claimed the inverted duty refund, your ITC will be reduced to that extent. There will not be any accumulation. So I am not able to understand what you mean to say here, whether notification stating that accumulated ITC on account of inverted duty structure, there will not be any accumulation of ITC on account of inverted duty structure, will lapse. So such a kind of a thing is maybe that if you are referring to the textiles, yes, there are certain restrictions that whatever is the accumulation is there, that for the past periods and all, that you cannot claim is what they law says, and it is approved by the Supreme Court also. On the chat box that I can see that there is one question that if any person pays all tax liability on outward supply in cash, I think that this I have answered, sir. So on the QA box, then all refund applications for 1819 onwards can be done till 31st of 23 after extension. Is this true? Can you please confirm? I need to check the details, sir, because that what are the extensions given from time to time. So if you want such a kind of a thing, maybe that offline that you can connect with me, I'll be glad to examine and come back to you. Sir, can we take RCM credit on purchase of raw materials for production which was exported? Sir, I'm having my own doubt that when you are purchasing raw materials, where is that RCM coming into the picture? Because on the goods sale, that I have not come across any cases where that RCM is applicable. So if you can tell me clearly where exactly the RCM applicability is there on purchase of goods for you, then certainly. But one thing is there, that you can take RCM ITC also when you are exporting, and certainly that you can claim it as a refund and whatever it is. Be specific in your query that I will be able to answer it better. From Cess Act point of view, if the final product doesn't have Cess, then it is exempt supply from Cess point of view only. Yeah, I agree. There is no dispute about it. So this may be in relation to the coal cess that earlier that you are referring to. So that is the reason I said that the coal cess that they have told, it is a law in itself, wherein that they told very clearly that what is going to be included and how the coal cess has to be put to use. I think that I have taken all the questions in the chat box as well as in the Q&A. So we are well within our time also. I think that there is one more question which I will entertain. We are selling products or services which are not exempted by any notification at the time we are claiming ITC. After some time, said services or products are exempted, and due to this, our credit lying in the credit balance. Can we claim it as a refund on the scheme of inverted duty refund? Sorry, sir, if it is exempt, then you are out of inverted duty refund structure itself. So I've answered even that last question also. Just come in. I think over to the Taxmann team. Thanks for your time and your patience listening. Hope I have answered all your questions. So if there is any other questions that you have, that I'll be more than happy to answer them. And my mail ID is here that you can note down. And once the presentation is there, maybe that at the time also that you can see it in the first slide.